Hey guys, it's Adam here from Squirrel with this week's interest rate update. Not a huge amount of change in the interest rate market over the last week. We obviously had the OCR update last week, which much to everyone's surprise, we've seen a cut in the OCR, we've seen no cut in the fixed rates. Not uncommon when you look at some of the interest rate updates in the past, but it's a real clear sign and a very, the first indication from the Reserve Bank that this is effectively the bottom of the interest rate cycle. I would suggest for anyone who's on floating rates at the moment who are holding out for better times, now's probably the time to fix, and it's certainly worth those who have been fixing for shorter terms over the last little while to start thinking about some medium term, 2-year, 3-year options, even fixing a few clients recently over that 5-year term. In regards to rates, we're still seeing that 4.49 rate from all of the big 5 banks, with TSB the front runner at 4.39 for 1 year. Over the long-term rates, the 4 and 5, we've actually started to see a little bit of movement in that space. So some of those rates have bumped up ever so slightly. A couple of lenders, of course, are still offering 4.99 for both 4 and 5, so some still really sharp rates out there. If I was fixing lending at the moment, I certainly would be looking at capitalizing on being in this low interest rate environment. 2-year, 3-year, in my eyes, is the sweet spot. Pretty risk-adverse person, so that kind of aligns with my personality, but I certainly think it's worth shying away from those 6-month, short-term, let's chase for cheap rates mentality.